Hey YouTube, it's Victor from TRADEPRO Academy, and today we've got an interesting topic for you and an interesting video for you. We're going to be discussing how much capital do you need to start trading, start day trading, and just start swing trading, whatever it is, just to start trading. So let's get into that topic. We'll be covering guidelines for Forex stocks, options, and futures. But first, the one thing I want to reiterate before going into this video, to a certain extent, it doesn't really matter how much you start with at the beginning, especially for new traders, because unfortunately that capital might be learning capital, so it might be your tuition for trading. The more important question is, how much money are you comfortable losing in terms of spending on your tuition, on your education, on your trading education? Because when you first start, usually traders don't really hit the ground running. 90%, remember the 90% rule, 90% of traders lose 90% of their capital in the first 90 days of trading. So to avoid that, of course, there's risk management procedures, there's education you could take. But at the beginning, start with a sum that you are comfortable losing. I'm not saying you're going to lose it, but start with a sum that won't break the bank, that won't kill you, and add as you grow, add as you build confidence, build consistency, and really get in the rhythm of things. So again, just to reiterate, it's pretty hard to hit the ground running. Everyone's just enthralled with all these millions you could possibly make. But at the end of the day, it comes down to the consistency factor. If you're taking on a lot of risk to get these millions overnight with a tiny account, it's just not realistic. And a downside of starting with a large account is that you know you have that cushion, so you'll just keep putting more and more risk on, especially at the beginning. So there are a few ways to avoid that. Of course, the risk management is going to be number one. Journaling, a trade plan is super important, and education and a community to build off of that. Now, we do advocate to start with smaller account sizes no matter what you're trading, just so you could learn. This is just learning capital. And it's okay if you have $20, $50, $30,000, whatever it is, set aside. Just siphon a tiny portion into the first account you open and start with that. Build a consistency from there, build the confidence, and then you could flood more money in. The first year of trading is pretty difficult, and the goal is honestly to break even or make money, right? It's not to make billions turn to a $2,000 account to $70,000. That is possible. But the first year, the first few months, especially the first quarter, the first 90 days, the first 3 months, your plan is to preserve the capital and make incremental gains. So again, we're using the 2% risk rule for trades. Whatever your risk management plan lets you do, what you feel comfortable with risking per trade. Of course, this is not risk-free. No trade is going to be risk-free. You're just going to have to accept the risk and look for that larger reward. Number one thing, again, is just consistency, building on the account. And just to reiterate, you guys should think about how you will grow your account. So not how much you're going to be making in 3 years, 5 years, whatever, but at the beginning, it's how are you going to grow your account? What's your plan? How are you going to incrementally size up? So let's say your goal is like $100 a day just to begin with. Well, how is that going to happen? What's your trading plan behind that? How are you going to grow this account? By the end of 3 months, you want to turn $2,000 into $3,000. How are you going to achieve that? Set out a plan, go by the plan, and just remain consistent and follow that plan. The plan's there for a reason, right? And the one good thing about starting with a small account as well is that you learn how to scale up with that consistency. So you can easily grow, depending on the market you trade, a small account into a substantial account within months, years, whatever it is. But the key is learning how to scale, and that's an important tool rather than just jumping in, let's say with a $50,000 account and starting to hit like 10 lots on ES futures right away, right? You're starting with 1 lot, you're starting with the smallest incremental size, maybe a couple hundred shares if you're trading penny stocks, or like 100 shares, 50 shares, whatever it is, and you learn how to scale up and manage a larger size. That is a great thing with the small account that you can't really learn with a big account. So if you have $50,000, again, as an example, starting to trade 10 lots where you're going to go 20 lots, and then next thing you know, you're just digging yourself into a larger hole, especially when you don't know what you're doing at the beginning. Another thing to consider is having a daily profit and a daily loss. So after that daily loss hits, a lot of traders kind of get wrapped up in their emotions and the psychological aspect of things and really just drop off. So when you have that mental loss, that mental stop loss in there, you really get an advantage to a certain point that you can review your journal, kind of sit down, take a breath, take a deep step back and be like, all right, what did I do today? Why did I get this loss? What am I going to do tomorrow to make this better? How am I going to become a better trader off this? And the daily profit is there as well for that same reason. Once you hit that, you can walk away, review, and continue the next day. The goal with the small account obviously is to grow it, but grow it consistently and surely. You're not supposed to be taking larger risk some days, less risk other days, making huge gains some days, losing them again other days, just consistent. Like I said before, the small account does build on the confidence, it builds on the experience, and it really helps you grow as a person and as a trader. So that's why, again, we've advocated the small account time and time again, and it's just a learning lesson, a little stepping stool. So we're going to discuss those four or so asset class that we talked about earlier. Before I get into that though, remember the pattern day trading rule. So in America, if you had an American brokerage and you're trading stocks or options, you need at least $25,000 in the account to day trade. So to trade multiple times in a day or a week. So that resets each day, but again, you're going to need at least 25,000 US in the account to be able to trade multiple times throughout the day. However, that can be bypassed by trading other assets like Forex and futures. So futures, again, you don't need 25 grand in the account to trade. Brokerages, again, they accept smaller amounts, and you can trade with smaller amounts assuming that you meet those margin requirements. Now again, for one ES contract through AM Futures, you need $400 of margin in the account. Now that isn't really solid of a cushion, so when you trade the minis, the ES minis, I honestly recommend 1,500 to 2,000 if you're starting with one lots at the beginning to have some cushion to let yourself grow and use that wiggle room to kind of just build on that education, knowledge, confidence. Now, with the introduction of the micros, again, you don't need that large of an account. And even with a $200 account, giving yourself a little cushion just to trade one lot, two lot micros that are $40 of margin each, you can really make an impact and really build on that confidence, build on that growth, build on that consistency before scaling up to larger size, larger account size, even the minis. Now with Forex, we recommend kind of more swing trading. Again, there are people that do day trade it. It's just a little jumpy of a market. And using $1,500, $2,000 in the account to start off with to learn, I feel like is a good amount to really learn that risk management. So if you're risking 2%, the trades are really small in that account. So just keep that in mind before funneling more money in, and really watch out for those news events on Forex. Now, if you don't get hit by the pattern day trading rule, $7,000, $5,000, $10,000 is kind of recommended for options because they are a little more expensive than futures. There are some margin requirements depending on the spreads that you do. Give yourself some wiggle room, and if you want to make actual size moves and trade larger contract size, even one contract sometimes depending on the stock price can be a little pricey, so just keep that in mind when you're trading options. Now, I gave you guys a huge rundown of what we think here at TRADEPRO Academy in terms of trade size for beginners, your first burst of capital into that account. Now, my challenge to you is don't fall under that 90% rule so you guys can make it, and remember the capital preservation. The first 3 months especially is the goal. Now, don't get carried away and let emotions take over and just start clicking buttons when you see a little red. Just let that ride out as it is in your trade plan. So go from there, get that trade plan down, get that consistency up, confidence up, and you guys can scale up in your accounts, add more money, and continue. So this is Victor from TRADEPRO Academy. I really hope you guys enjoyed this YouTube video, and we'll see you next time. Comment down below what you'd like to see from us, what kind of information you want to see. Take care.